Russell 2000 pulling back from yesterday's post-CPI gains. A cooler inflation report and potential rate cut on the horizon. Those are said to be a green light for a further broadening of the market rally. So is now the time to bet on small caps? Let's ask Jill Carey Hall of BofA Global Research. She is here with me at Post 9. Jill, it's good to see you. We've been waiting for the conditions, I guess, to be in place to see whether, in fact, small caps get a reprieve. Everyone can point to the underperformance versus large. It's been extreme for a while. What do you think it might take? And I guess how to approach small caps within a portfolio?
Right. Yeah. Thanks for having me. I mean, I think, a lot of the macro conditions have been favorable going into the year. We were positive on small caps for the fact that, GDP has been better than expected. We're seeing a manufacturing recovery. We're seeing an inflection in a lot of the cycle indicators. So that's all positive. But after the April inflation data came in hotter than expected, we kind of took a more tactically cautious stance on the Russell 2000. I talked to a lot of investors, and I think investors are kind of waiting for not just the Fed to be done hiking, but for those cuts to actually seem like a reality given all of the rate sensitivity and refinancing risk in the Russell 2000. So, I think this inflation print was a step in the right direction, but it was really the first soft inflation print that we've seen this year. So I think we want to see further evidence, and I think that's what the Fed wants to see as well, that inflation's actually easing. And I think we want to see also more confirmation just that the back-end loaded profits recovery that analysts are expecting for small caps actually looks like it's going to come to fruition.
Yes.
First quarter earnings was pretty good, but revisions have still been negative. And when you kind of look at how that's trended, the profits recovery earlier this year was expected to start a lot sooner than it's now been pushed out to. So by the end of the year, we see a very back-end loaded profits recovery. So I think those are sort of what could cause the broader Russell 2000 to do well. But in the meantime, we still see pockets of opportunity in small caps.
I was going to say the clarity on a rate cut or the reality of a rate cut, is it something that in an actual, tangible, practical way is going to matter a lot for, let's say, the typical small cap company? Or is it more about, a signal to investors that there's a little bit of a different risk reward setting up?
Well, I think, one rate cut may not necessarily matter as much as just the fact that rates are not going to stay high forever and that we could be going into an easing cycle, especially since, roughly half of debt on small cap balance sheets is either short term or floating rate. And credit spreads are pretty narrow right now. But obviously, if we see those widen and if rates stay high, that becomes more and more of a risk. So if we can see more confidence that we're going to be in a cutting cycle, I think that should, give investors a bit more confidence in terms of the profiles of small caps right now.
Something you start to hear now, and maybe it's just more of an indication of where sentiment is look, the Russell 2000, the entire market cap is smaller than 3 individual mega cap stocks. Why do you have to care? I guess from a market perspective, and maybe that's a good sign. People aren't looking as much. But you said you have ideas about where within small caps make sense right now. Where can you add a little value?
Well, I think this is, a good environment to be selective, pick stocks or be active rather than passive. I think there's problems with both small and large cap indices. The large cap index has been very concentrated in a small number of stocks. The Russell 2000 has a very high proportion of, non-profitable stocks right now. So, we rather than owning the index, we would focus on, higher quality small cap stocks that are more cyclical, could benefit from some of the improving economic trends if that continues, but that don't have a lot of leverage or refinancing risk on their balance sheets or that aren't as rate sensitive, because I think those parts of small caps could still do well near term. And then if we get more confidence on some of the things that I mentioned, then that could be a better environment for the Russell overall.
Gotcha. And so obviously it's sort of outside of tech, a little more old economy with
some of the cyclicals, cyclicals value, but
yeah,
tilting toward quality. Yeah.
Great. Joe, appreciate the update. Thank you.